Hi, good afternoon, everyone. Today is 31st of March, and today is Monday, and our markets are closed. But there is a lot of stuff happening in the international markets right now, and I thought I'll make an update on that. So, the international markets have cracked very big time right now. And as we speak, Asia, most of the markets are down anywhere between 2 to 4%. In fact, a lot of markets are down 4%. And the reason being cited for that is that the tariffs are going to get kicked in from April 2nd, and there has been no respite for that. And of course, along with that, there are other things like geopolitical tensions which have been flaring up for quite some time. So all these things are getting added up, and we are seeing a global sell-off right now, and it's a huge one. Even our Gift Nifty is indicating that we are down by almost 250 points. And today, because we are closed, the impact is going to be felt tomorrow if the world markets don't improve overnight. And as we speak, the US futures are also down, and the VIX in US is very high. So I'm going to speak about all of that and what it means for our markets and how our markets are placed. So I'm going to take you through all of that. So let us start first with how the Asian markets are right now. And it's, as I said, it's a sea of red. If you see, this is the Asian markets right now. So Gift Nifty is indicating it's actually gone down now to 300 minus 300 points. So Gift Nifty is trading at 23,335. That's almost 1.2% cut. Nikkei is down minus 4%. I don't know when did I see Nikkei last at minus 4%. It was, I think, during the Japanese yen crisis. Then, that we had seen this kind of a fall. Taiwan is down minus 4.3%. Kospi is down minus 3%. So these are huge cuts that you are seeing in the Asian markets. And it is not a very healthy sign that we are seeing right now. And all of them are down. Probably our markets are still showing some resilience, down minus 1.2%, but it doesn't look very nice right now. If you look at what is happening in the international markets, if you look at this, the US S&P VIX has gone up and just crossed 21. Now this crossed 21 on Friday itself, wherein you see Nasdaq had actually declined by minus 2.6%. Now what are US futures indicating? They're indicating a further down start of minus 1.2%. So you can see Nasdaq futures over here, they are indicating that minus 1.2% is going to be added on to this 2.6%. So that's a 4% drop straight in 2 days. The dollar index has gone down below 104, so that is showing some sort of a panic. S&P futures are also down by 1%, and the silver and gold continue to make all-time highs. So gold has made an all-time high. It has breached 3100. Now that is very significant. I'm going to talk about gold in a bit. And silver has crossed 35. Now these are huge moves. These are not small moves. Firstly, what I'd like to draw your attention to S&P VIX. So S&P VIX has crossed 20. As you can see, the 21.65 is the current. Look at the increase, 15.84% increase in VIX. And this is the 1 week chart of VIX. It had made a low of 17 and now it is at 122. Now this is not a good sign. Our VIX is trading somewhere around the region of 15. If you're not 15, it's trading to the region of about 13 to 14. That is where the band is. And I think the VIX had actually gone down even on the weekend, even on the last trading day of Friday. So our VIX is way below this, and look at where the US VIX has gone. So there is going to be some increase in terms of our VIX also. VIX can be managed till about anything below 20 is still manageable, right? The moment it crosses 20, then things start to become very, very scary. Our markets, we see VIX going up above 20 only if there is some sort of a crisis, or there is some election or some news, some budget. During budget it goes above 20, but we have seen that it's very, very difficult for trading during those points in time, and the moves are very, very wild. So if the VIX increases, if there is no cool off in the global markets, then our VIX, which is at rock bottom right now, 12-13 level, is going to rise up sharply. And we really are not prepared for that kind of a sharp uptick in the VIX. In fact, I was also quite surprised when I saw the VIX going down like this and the US markets VIX going up. But now this crisis has gone full blown now. So there could be an impact on our markets, VIX as well. And once VIX starts to go up, it doesn't come down so easily, so that also indicates that the markets will continue to suffer for some time to come, until unless there is a clear thing on the tariffs bit, and the thing gets cleared. We are going to see some issues. Now coming to the next one, next big one, which is gold. Okay, now gold, as I have been maintaining for quite some time, has crossed 3100 to ounce to a dollar. Now that is huge. 3100 is huge. Basically, this means that we are going to cross, I think, 90, close to 90,000 on our INR in terms of the gold prices. And the gold prices have steadily been increasing over the last even 5 years. So this is the 5-year chart of gold. You look at the way gold has almost from 1500, it had gone to 1500 to 3000. That's doubling of gold in 5 years. And mind you, this is in US dollars. So our currency has also depreciated. So if you look at it in terms of INR, the gold rise has been much more compared to what it has risen in USD. Now, what does this mean? What is this indicating? This is indicating that there is a complete risk of environment which is there. So people are now trusting only gold as a safe haven because of the geopolitical uncertainty. And all the crisis started actually some couple of months back on the London bullion market, wherein the physical deliveries of gold and silver were delayed. Now that kind of set up a panic in the physical gold delivery market, and that spilled up to New York markets as well, wherein there was a premium in terms of the physical gold. Now all these can be said that they are unverified reports, and there is no such thing, but the price of gold is not coming down. And we had started hearing about this crisis a couple of months back when the price of gold was 2900, and then we saw that 3000 also got crossed. Now we are seeing 3100 has got crossed. Now there was a report that came out, I think it was JP Morgan, who have put a gold forecast of 3300, and they're saying 3500 in a couple of years time. So there is, what is this indicating? This is indicating that the currencies are losing their value versus gold. And gold as a form of storage in terms of your value of storage has been increasing. And I've been maintaining this for a very long time, that there needs to be a certain allocation of gold in your portfolio, simply because it protects you against all sorts of unknown risks. There is a known unknown risk, there is a known risk, but there's an unknown risk. So gold will protect you against all sorts of unknown risk. It will protect you if the currency is getting devalued. It will protect you if there is a geopolitical crisis. It will protect you if equity markets are going down. So gold has a fantastic store of value for the last 5,000 years. And time and again it has shown that when central banks around the world go on reckless spree of printing money, like we've seen in the case of US Fed, where their debt has completely gone out of control, then gold comes in and kind of gives some stability in terms of where the actual value of the currency is. So it is not with gold which is appreciating, it is a form to see that the fiat currencies of the world are depreciating in comparison to gold. So this is my take and whatever little I understand of the international gold market, because it's a very complex market for anyone to understand completely. But the way movement of physical gold and the way gold prices are going up, it is indicating that there is some sort of a pressure, some sort of a crisis building up. Now I don't know whether this is because of the tariffs, or this is because of geopolitics, or this is because of dollar value going to happen, but whatever it is not good. So I just hope that everyone has gold in their portfolio, and it provides a lot of stability. Like equity markets are going down and gold is making a new all-time high. So that says enough in terms of the precious metals and how allocation should be there for gold. Now coming to what is happening on the other things, this is, yeah, so this is just an article on why gold prices are going up. It has been going up because of fears of US recession and tariffs and so on and so forth. Now let us look at where we are in terms of our markets. Now look at this. This is from the 52-week high. Now you look at where is Nifty. Nifty is minus 10.5%, and Nifty was not able to break the high. I'll just see if I can show you the chart for this. Just give me one sec. I will just open the chart for Nifty so that it is clear for all of us where Nifty is headed and what is the attempt that we made towards clearing the recent high. Yeah, so this is the chart. Now you look at, this is the resistance, two resistance that I talked about, 23,800 and 24,200, and I had told that once we clear this 23,800, then we should aim for 24,200, and if we are able to clear this level, then we can safely say that we are out of the woods. But look at the reversal. The sharp reversal came from 23,800 odd levels only, and now we are here, and tomorrow we are going to go somewhere over here. Now if this doesn't reverse before we cross this line, then it's like we are looking at a lower low now, because the previous low was not taken out. We just reversed from there, so there is hardly any strength in the market which is there. Though this this relief rally was good, because February was down minus 6%, so we got some sort of a relief rally in March of equal magnitude. But still, the time we are able to clear these two levels, we really cannot say we are out of the woods, because this lower low, lower high pattern needs to break, right? There needs to be some new highs that are reclaimed and so on and so forth. But having said that, I have maintained this before, that still in terms of large caps, in terms of financials, in terms of the other big sectors, we are still okay. The problem is in the small and mid cap area, wherein even after this 20-25% correction, we are still much more expensive than what we have seen as average multiples during big corrections. So if the small cap index is trading at, let's say, 25 multiple, when the corrections happen, they go to as low as 15 multiple and below. So there is a huge gap. By no means or no stretch of imagination, small caps, etc., are let's say inexpensive even at these valuations. So one has to be very careful in terms of where you are investing. The best way to invest is maintain asset allocation, maintain percentages, weight, and see if a particular index is down at a standard deviation level, or it is down at levels where you see that this is the maximum that it goes, or this is the average that it goes in a year. Then you can look at adding some to your indices. So there needs to be some sort of a system that you need to play around with in investing. Just don't go blindly and go on tips and start buying, or you read something which you don't understand and you go and invest. Don't do that. So if anyone is interested, I have my mutual fund services to offer. I'm a mutual fund distributor, and there's a Google form in the description below. So if anyone is interested, please go and fill that form, and I will help you make a very solid, good mutual fund portfolio based on the things that I've talked about in terms of allocation, in terms of when to add and what to add, and good, solid, quality mutual funds. So if anyone is interested, please go and fill up the form, and I shall get back to you. So now, yeah, coming back to our markets, as I said, that there is not too much value even now after the correction in small and mid cap. So one has to be very careful where you're looking to invest, and especially during such crises. I don't know what's going to happen tomorrow in terms of small and mid caps. We'll only have to see if the main indices is down 1.5%, 2%, then small caps can fall even further. So let's see how it plays out. Now let us look at what the future market is indicating. I think it's all sea of red, so there is no point seeing it. We already discussed. US tech is down -1%, US small cap is down -0.9%. European futures are all down. Let's see how Europe opens. So we will come to know how Europe opens. What else is happening? There is one more thing. This is a geopolitical thing, which is Trump threatens bombing if Iran does not make a nuclear deal. So this is another geopolitical thing that has sprung up all of a sudden. If this happens, then there is going to be a premium in terms of the oil as well. So if oil goes up for our markets, it is never good. So let us hope that this variable doesn't come into the picture, because if this comes in, then there is going to be another another problem in terms of the world markets reacting to this, and our markets are not going to be spared because our markets are dependent on the oil prices. So though oil prices have cooled down a bit, and I'm not expecting a real rally in them because that has been the trend. So oil prices have hovered around 69 to 80, you know. Right now they're at 72, 73. So let's see how it goes. I'm not very convinced that oil prices can rise from here, but if they do, then you know we are looking at another problem staring us. So I think that's about it in terms of the update from my side. Things are not looking very pretty right now as we speak. Thankfully, today is a holiday for us, so we are not trading, so it is good. But come tomorrow, we are going to open up, gap down, unless there is a significant change in the US markets overnight. And this tariff threat of April 2nd is going to spook the markets till the time it is resolved, because everyone is kind of waiting how this will play out on April 2nd, how much tariff is going to be there on each country, which countries are going to be spared, etc., etc. So it is all very, very fluid situation right now, and we have to see how to play this, but maintain your calm, maintain your composure, trade according to your system, invest according to your system. Every crisis is an opportunity, never waste a bear market has always been my saying, and my motto, not saying, this is a very old saying in fact. So never waste a bear market, and always try and invest during corrections. It helps you lower down your costs, etc. So don't panic tomorrow. If someone has got very strong systems, then there's nothing to panic about. But yes, of course, corrections are painful, and let's see how they play out. In terms of our markets, everything is stable right now, but except for the fact that we have run up a lot in the last few weeks. So possibly, you know, there could be some pullbacks, and if we are not able to hold on to the lows, then possibly we are looking at going down much more. So that's it from me now. If you like this video, please do subscribe to my channel. Please share in the comments box how you find the video, what are your thoughts, and if anyone is interested for mutual fund portfolio building, they can contact me through the Google Forms as well. So that's it from me now. I shall see you soon with another update. Take care. Bye bye.